Good day, fellow investors. What's driving this market that's up 10x since 2009 and might go another 26% over the next 12 months? Well, it's certainly not valuations because this is not a thinking market with a Shiller P ratio above 40. However, as it is not a thinking market, it's somehow predictable on flows. And for that, we need to go into academic research, the inelastic market hypothesis by professors Gabaix and Cohen, alongside the research on the behavior of individual investors by Laritz and Wurgler. If you don't want to read academic papers, don't worry. The link to the videos explaining that by yours truly in the description below. Very good, very important to know the inelastic market hypothesis that in summary tells you that $1 into the market pushes the market capitalization up $5. And then we have the algos, the passive investments, the gambling, the retailers not thinking, really breaking this market. And then it is all about flows. Check those videos out because only 1% of the market thinks about fundamentals. Therefore, it's all about flows of money. Fundamentals are irrelevant. And from that perspective, we know that the Fed has cut rates, will likely keep on cutting, and when Powell is out and the new Trump guy comes in, we'll have perhaps 1% interest rates. Because as Trump says, Jerome, too late, Powell has to be ousted. The Trump people are saying rates at 2% forever. And if rates are at 2%, stocks are going up. That's logical. Because there is, 7 trillion in money market funds. If just 1 trillion is not happy with getting 4% is okay now. But if you're not happy with getting 2% as that yield goes down, then that is trouble. And we might also go back to 0%, which then again pushes stocks higher in an inflationary environment. Further, ETFs keep smashing records, inflows into US ETFs. 1 trillion already reached in 2025, the fastest pace to reach 1 trillion. On top of the trillion into ETFs, companies are doing buybacks, another trillion per year. You can see here the chart. So if 3 trillion money comes into the market in the next 12 months, that is times 5 due to the inelastic market hypothesis. That's market up by 15 trillion market capitalization. On this, that is 26% up in the next 12 months. And the stock market might get to 8,638.92. Mark this and then let me know if I'll be right. Of course, this would be without shocks, everything going smoothly, economy, growth, AI, everything. But even if that happens, the question is, and then? What could possibly go wrong before or after that? What happens in a recession? Buybacks are destroyed. No more buybacks. 1 trillion gone. ETFs, when things are not going good, people are investing much less. That's another trillion gone. When there is a panic, valuations change. As I said, it's not a thinking market. However, we have seen what has happened 2 weeks ago. The market lost the monthly gains in 1 hour. And there was this great email here that I got a few days ago. What do investors mean when they say, I'm going to participate in the current bull markets, I'm not going to fight the Fed, and I'm going to capitalize by protecting and profiting in bear markets? They are simply saying they want to play the market, they want to party as long as the party is going. The Fed is going to lower rates, thus inevitably stocks will go higher. However, everybody thinks they are close to the exit door. They will get out like that when the time comes. However, if we look at the market, they don't know that the market, when it starts to panic, the exit door is extremely small. Stock market earnings can crash 50% in a recession. 120 earnings, P ratio 15, that's 1,800 for the market, which is 70% down. Call me crazy, but that can happen too. because the debt is not sustainable. We are trying to grow on more debt, on exuberance AI. I hope it lasts, but I just want to do well whatever happens. Therefore, let's say, hedged in this market. Check my research platform to see how.